Income Tax Act 1961. Lesson 7. Income from house property. Good morning everybody. I am Mr. T.B.Agarwal, retired income tax officer, speaking from Agarwal Income Tax Tuition Classes, Akola. We have studied computation of income from salary in the last video of lesson 6. As per the syllabus for BCom Part 2 Semester 4 and BBA Part 2 Semester 3 examinations, the course of first two units, that is, basic concept of income tax and computation of income from salary, is completed. Now, as per the syllabus for BCom Part 2 Semester 4, a part of Unit 2 and Unit of 3 for BBA Part 2 Semester 3, computation of income from house property is to be studied. The students are requested to go through all these videos very carefully as the examinations are approaching fast and they have to appraise themselves the knowledge of income tax if they are interested in career in income tax. These videos are made keeping in view the requirement of students. The language used is very simple to be understood by students having average knowledge of English language, avoiding difficult words and constructions of sentences and generally understandable language so that the students can develop their interest in reading and listening the videos for their own benefits. After completing the basic concept of income tax and computation of income from salary, we will now turn towards computation of income from house property. However, before commencement or beginning of the next chapter, we may see one example on computation of salary income as under. Example 1. Mr. Ramesh is a state government employee getting basic salary of rupees 30,000 rupees per month. He is paid DA of rupees 3,000 per month. He gets HRA, that is house rent allowance, at the rate of 5,000 rupees per month. Professional tax deducted is rupees 2,400 for the year from salary of Mr. Ramesh. Mr. Ramesh resides in his own house in Delhi and no house rent is paid by him. Compute the income of Mr. Ramesh from salary for the assessment year 2021. Solution. First, the student should write name of the employee or assessee on the top. Then write assessment year. Then write PAN number if given and then write the heading as under. Name Mr. Ramesh. Assessment year 2021. PAN number if given. Computation of income from salary. This will be the heading. 1. Computation. Basic salary 3,30,000 rupees. 2. DA 36,000 rupees. 3. HRA as under. Actually received 60,000 rupees. Less exempt. List of the below. A. Actually received 60,000 rupees. B. Paid over 10% of salary, nil. C. 50% of salary because he is residing in Delhi, 1,80,000 rupees. List is nil. Therefore, nil is allowable. Hence, exempt nil. Add HRA full 60,000 rupees will be added to the income of the assessee, that is Mr. Ramesh. Total income 4,56,000. Less standard deduction 50,000 rupees and professional tax 2,400 rupees, that total 52,400 rupees. Now the salary income will be 4,03,000 rupees 600. The rent paid is nil. The minimum of ABC is exempt from actual rent received. Since the rent paid is nil, no amount is deductible from HRA received and the full amount of HRA is added to the income. If the assessee resides in own house or if no rent is paid by him, then deduction for house rent will be nil, means no deduction will be allowed. Now you see the notes. Note 10% of salary for HRA means basic plus DA. B. 12% of salary for employees' contribution to Provident Fund means basic plus DA plus commission if any. C. If interest-free loan is taken, then interest at normal rate of bank on the loan amount to be taken as perquisite and added to the income of the employee. Now we will come to the income from house property. We have seen in the beginning that as per section 14 of the Income Tax Act, there are 5 heads of income under which income of an assessee or person is to be computed or determined. One of the heads is income from house property, which is computed as per the provisions of section 22 to 27 of the Act. This chapter is also very simple and interesting, like salary. First, we will see as to what kind of income arises to a person from house property. People build houses and give them on rent. The owner of the property gets rental income by letting out such house properties. This income is known as income from house property. The sum or amount received or receivable as rent is called or deemed as annual value in the language of income tax, which is chargeable to income tax under the head income from house property. Thus, annual value of house property means a sum for which the property might reasonably be expected to let from year to year, or b if the property is let, the actual rent received or receivable by the owner in respect of the property, if more than a above, then the amount so received or receivable, or c if the property is let and was vacant during the previous year, the rent actually received or receivable by the owner, even if it is less than a above, this amount so received or receivable will be the annual value. The house property consists of any building or land appurtenant thereto. However, it may be noted that rental income of only open plot not attached to a building is not chargeable to tax under this head of income, but is taxable under the head of income from business or income from other sources. Further, it may be noted that the meaning of the word building is wide enough and includes residential houses which are laid out for residence or used for self-residence, or a building laid out for office use or storage or for the use of factory, music hall, dance hall, lecture halls and public auditorium or shops, schools, etc. The land appertaining thereto, it means a playground, backyard, compound or road or two streets, etc. Here, while computing the income from house property, the important conditions to be kept in mind as per the provisions of section 22 of the Act are that 1. The property should consist of any building or land appertaining thereto. 2. The assessee should be owner of the property. 3. The property should not be in use by the owner for his business or profession carried on by him, the profit of which is chargeable to income tax. Now, who can be the owner of the property for income tax purposes, or why the third condition is to be satisfied, will be discussed in latter part of the video. Now, we understand that the annual value of house property is chargeable to income tax as income of the assessee or owner. However, to earn profit or earn income, one has to incur some expenditure also. The person making profit or earning income has to spend certain amount as expenses. In salary cases, we have seen that to compensate the likely expenses, standard deduction is allowable to employee or assessee. Likewise, in getting rental income, the owner has to also incur some expenditure for paying in municipal taxes, repairs of the building, insurance premiums. If the owner resides at long distance, then he has to depute some person to collect the rent from the tenants, etc. Therefore, in determining the annual value, that is ALV, of the property, the owner is allowed the deduction of taxes levied by the local authority in respect of the property and actually paid by him in view of the provisions of section 23 of the Act. Therefore, the income chargeable under the head income from house property shall be computed after making the following deductions as per the provisions of section 24 of the Act. 1. 30% of annual value. This covers the expenses made for insurance premium, repairs, collection charges, etc., which were allowed up to assessment year 2001-2002 separately. Est- Now, a standard deduction of 30% is straightway allowed from the annual value. 2. Second deduction is in regard to interest on borrowed capital for acquiring or constructing the property with certain conditions or restrictions in respect of self-acquired property. This has been made clear in the example letter. The income under the head house property is computed from two types of properties separately. One, let out property, that means the property given on rent, and second, self acquired property, that is one property for own residence up to assessment year 1920 and two properties for own residence from assessment year 2021. This will be illustrated in the next videos. If you like this video, then please press the thumbs up icon and subscribe the channel, which is free of cost, and press the bell icon next to it for getting the notification of my next video. Thanks.